See, a pitch deck is actually your business presented in logical and crisp manner and covering all the points which should be covered from an investor's perspective. Now, uh,
Good afternoon, all, and good evening, all the participants who are from the different countries. Before we start our session, let me give a brief introduction about our today's speaker. Mr. Tushar is a founder CEO of Consultancy Ventures and Saffron First. Mr. Tushar is an accomplished professional with experience spanning multiple sectors from venture capital, Big Four consulting to CFO of Guggenheim Partners-owned company. He is an adept strategic planner with proven history in mergers and acquisition, private equity, and debt advisory. He has been mentoring startups and business. He has expertise of identifying new growth avenues, developing innovative strategies, financial and business advisory, fundraising, wealth management, and creating pitch decks for the different organization. His expert opinion is often sought by leading business news channels and the publications like CNN News 18, VCTV Business World, Business and Economy, Curious and Digital Market Asia. Lastly, he received an executive education from Harvard Business School, MBA in Finance from University of Delhi.
thank you, Shivani, for giving the introduction. A pitch deck is a very important document because what happens is that there are investors who raise money from the market to deploy their money uh, in different startups. And once because there are a lot of startups which want funding from these investors. So these investors, they get usually 20 to 40 pitch decks in a day, not pitch decks, but new startups in a day. And their attention span is very less because they are always bombarded with startups. So it's very important to have a good pitch deck. And a pitch deck is not necessarily a document which is too long. It has to be very crisp. It has to be very short, something like 15 slides. 15 slides is quite a lot. And so, let me start off with my presentation on what all to include in a pitch deck and how to create a pitch deck. Just starting off. For everyone, I am available on LinkedIn. My name is Tushar Kansal, and the company's name is Consultancy Ventures with a K. And if you have any in the future also, if you have any questions, you can approach Shivani or you can approach me directly through LinkedIn. Now I'll share my screen uh, and discuss about the, yes. Are you able to see my screen, Shivani?
Yes, sir.
So how to make a pitch deck? What is a pitch deck? A pitch deck is a document that gives a brief overview of your business plan. Now, there is a difference between showing your brochure to the investor or showing your product pictures and product specifications to the investor, or showing something about your technology. But what is a pitch deck? A pitch deck is which captures the business plan behind each product, each service, behind each business idea, and it defines the business plan in such a way that the investor not only knows about the uniqueness of your creative technology, your innovative product, but he also knows about how much money will go into the business, what is the outcome of that investment, in how much time can that investment be uh, taken out by the investor, and all these things. So why is it important? It is important because the investor has very less time, and you are approaching the investor for asking his money. and it means that you have to be on your best foot forward, your best impression you have to create. And hence it is important that your pitch deck should be uh, it should stand out completely. The investor should see your pitch deck and say, this is the company I was looking for. And uh, apart from that, the investor should get answer to all his questions. And uh, also, a lot of useless information which sometimes we tend to tell the investor, repetitive information, like, this technology is this, it was we keep on repeating. So that part is not there. So that is the importance of a pitch deck. It should convey your story in a easy to understand, informative and convincing way. What is should be the structure of a pitch deck? uh, I told you 15 slides. So, into my mind, these 15 slides should be the cover, the problem statement, the solution, team behind is very important, market size and opportunity. Sometimes people give 3 slides, 4 slides on market size and opportunity. Market size is very important, but you don't have to really give too many slides. Then product, then business model. Traction means that what is the current business you are doing, what is the current turnover you are doing, what is the current EBITDA you are doing, which is operating profit. Then competitor analysis, uh, you know, uh, what are the competitors and how you are better. Competitive advantages means how you are better, but in a separate slide. Then financial projections, that today if somebody gives you $1 million, how will your turnover grow? How will your EBITDA grow? Your operating profit grow? And so, usually financial projections for 5 years. Then the ask, how much funds you are asking for. Use of funds is very important. The investor wants to know how will his money be used, and future roadmap, uh, as in the next 5 years and beyond. And last, the contact details. So these are the 15 crisp, short way to present your business plan in the best possible manner. Now, first to start with the cover slide, which is your company name, tagline, logo. Then, secondly, company overview. This tells about your company in 3 to 5 sentences. So many people, they give their mission statement and vision statement, because investor always likes to believe that you are actually out there changing something fundamental in the market, creating something fundamentally new for the consumer. And hence your mission statement and vision statement, they should align with uh, what you are creating. Now, if to give you a very common example is Uber. Uber was creating a way so that people can access transport, commercial transport, through smartphone, on the fingertips. So their vision statement and mission statement was very huge. It was changing the entire structure of commercial transportation throughout the world. And by using technology, by using the smartphone, and by bringing these services, taxi services, on your fingertips. So mission statement and vision statement, they matter a lot. So you should give them. And a lot of times the investor wants to know that, how did you think about this business? So that's why it is important to tell that, that you were sitting somewhere, you saw this problem happening, you kept on thinking about it, then you discussed it out, you researched about it, and then you came to the conclusion that you have to create this kind of business. Problem statement, to start with. Uh, Now, problem statement can be, it depends on sector to sector. If you are in agriculture, I'll give you an example. Agriculture, everybody wants to cut middlemen out. Everybody wants that organic, fresh farm produce should reach from the farm to the table of the consumer, and the middlemen should get cut out. There should not be too much of inorganic uh, produce, because nowadays the customer is very aware. They want organic products which are created without the use of chemicals, and also use of technology to bring transformation into the way uh, the agriculture sector is currently run. And so a problem statement will give the problem according to what you are solving. uh, Now, don't try to overstretch the problem statement slide. Don't try to give so many things which will you will do in the future. So if you give too many things you will do in the future, then it will become very confusing. So you have to state a specific set of problem and keep them short and straight, and don't be repetitive. Next, once you have given the problem, then you have to give the solution. And when you are giving the solution, then you have to give it in a very short way. uh, like uh, I'll give you an example. When Airbnb was starting up, then the problem they had identified was that there are a lot of residential properties which are available for your stay while you are traveling. But uh, but it is very difficult to access those those properties. So Airbnb, while it was giving the solution, it said that we will provide easy access to residential properties, homestays throughout the world at cheap prices to the traveler by the use of a smartphone on the click of a button. So this is the statement, the solution which they offered while giving the problem. Next is very important, the team behind. Now, what happens is, suppose you are running a technology company, and you are yourself not a technology person. And when you are showcasing the team, then you have to uh, show the balance of technology, finance person, then product person, then design person if the product needs designing, and marketing person. So you don't necessarily have to include a lot of people straight away in the team, but the major ones should be very balanced. So you have to give the background of a particular team member, the photograph, what experience they bring to the table, and uh, and and all the team members which you are showing here, they should be complementary. So there should be a product guy, a marketing guy, a technology guy. So your team should be balanced, because many times what we have seen is that if you are creating a technology product but you don't have a tech co-founder, then many times the result is not good, because you are creating a focused company focused on technology, but at the same time the balance of technology founders is not there. So you have to address those kinds of problems beforehand. Now what you can do is, in case you don't want to have a technology more technology founders because of any reason, XYZ reason, you can take senior hires like CTOs, and give them ESOPs, employee stock option plans, and then bring them on board. So that is another way of having a balanced team. Team can be founder, non-founder, technology, non-technology, finance guy. So all those balance in the team can come. Then is the market size and opportunity. Now, what happens is if you look at market data, you will find the numbers as to what is the billion-dollar market, what is the global market, what is the local, like if you are from Philippines, then what is the local Philippine market? Suppose it's a coffee company, then you have to show that the global coffee market is this much. Within the coffee market, these are the three, four segments. Then uh, within that, Southeast Asia is this much market, and Philippines is this much market. And once you are giving all those things, you have to don't forget to give the source of the data. You have to give a small uh, you have to give us, like, just see this slide. This is a sample of the market size slide. It says the digital education content market size has potential to grow from USD this much during these 5 years at a CAGR, compounded annual growth rate, of 11.94%. And it gives a beautiful uh, map also of which country we are talking about. Here we are talking about India. But it also gives the source. You have to give the source of the data. From where did you take the market um figures? So the source is very important. You have to, here it is written source PwC, which is PricewaterhouseCoopers. You can also say PwC 2020 education report. So you have to qualify from where are you taking the data. A lot of this is a very big mistake. A lot of people give market data, but they don't give the source. That is a big mistake. And why market size data is important, I'll tell you. I was sitting with a very big fund who has office in Aerocity in India, in Delhi airport, and they have like $300 million under management. And while my client was discussing about the pharma SaaS opportunity, software as a service opportunity, in 1.5 hours, we took down all the notes, we took down all the figures. And when we calculated backward as to what is the market size data which is coming, like, the pharma guy said there are these many distributors, and each distributor handles this much business. So one can multiply and see then what is the total market size. And the fund guy, he did a reverse calculation after sitting there for 1.5 hours, and he calculated that the market size was less than $1 billion. And one of the investment thesis of the fund guy was that they have to invest only in companies with more than $5 billion total addressable market, TAM. And the deal was thrown out. So what I'm trying to say here is, be very sure about your total addressable market, that what is the market size you are addressing. And that also plays a role in your funding. It plays a big role, because the fund will say, why should I put money in a company which is in a market which is less than $5 billion? It means that my company can never go beyond 20% market share, which is $1 billion. And I would like my company to go $5 billion, $10 billion. So those kind of problems they come. So don't overemphasize on the market slides. Don't have three, four slides, just have one or two, but give the source and present your market size in the best possible manner. Now, business model. Business model, uh, people have very high notions about how to explain their business. They feel that a business has to be explained in 1 hour, 2 hours. Uh, but I differ. Uh, the easiest way in which you can explain your business in easiest language, in easiest terms, that is the best way to explain your business. So this slide, it has to show the business model. It has to show how does your product work, in include some product pictures and videos. Uh, and I have seen some investors who told me that, Tushar, when we want to see the business model, we also love seeing the product. So in case you have a product demo, which is possible, uh, so this slide, if you present it quite nicely, then for sure the investor will give you time to see your product also. So this slide should be very nice. Like here, if you are creating a tech uh, product, then maintain all revenue streams like commission-based model, software as a service model, SaaS model, whether it is monthly or yearly subscription. What are the sales channels, direct channels, wholesale channels? So you have to, and in business model slide, don't bother too much about telling the business you are doing, but it, that can be covered in the next slide, which is the traction slide. And then in the traction slide, you have to give your achievements, like how many products you have sold. Uh, you sold them through which channels, whether they were B2C, B2B, or B2B2C, whether they were distributor-led channels, uh, and in the last 3 years, what is the unit economics? Now, this is very important. A lot of companies, startups, they used to burn investor cash and show the revenue, but they were making losses. And even now, we have many companies which are making big losses, but the investor is now very aware of unit economics. Unit economics means that each product or service which you are selling should be profitable. Each product or service should result in some cash flow to the company. And that is why this traction slide is very important. It is very important to show that what has been the revenue growth in the last 6 months, what was the customer acquisition cost, uh, what was the the number of hits on your website, how much they translated to uh, actual business, all those ratios. If you are able to tell about your business of last 6 months to 1 year using some of these ratios to tell that on the unit economic side you are uh, positive, then it will be a big plus for you in front of any investor. And that is why this traction slide is very important. So here you can give revenue growth, customer growth, vendor or partner growth. This is a sample of traction. See, it gives 2019-20 as 20 some 2.3, uh, then 2021 zero point 0.8. It's just a representative. It is not a perfect slide. And then it gives the growth in terms of product sales. How many retail locations, how much sold per day, how many wholesale locations, how much sold or in wholesale basis per day, what were the gross margins and net profit margin. So this is a sample. Don't see, if anybody wants to see samples, I can send them the sample pitch decks which we create. These sample slides are very indicative. They are just to give you a rough idea. Then competitor analysis. Uh, you know, uh, we were having a call with a very famous investor, the guy who created uh, a huge company and currently is an investor in almost 20 companies. And this investor understood the global prepaid debit card kind of market. So he understood that particular market quite well because he had invested in two fintech companies also. And while we were talking to him, he was just trying to figure out that, okay, you are creating a new fintech platform. Now, he was trying to, in his mind, he was trying to see that which competitor are we closest to. that what the thing which we are creating. He was trying to say, okay, are you closest to that particular product in the US market, or are you closest to this particular product in the Southeast Asian market, or are you closer to this particular company in the Singaporean market? And while talking to us for 1 hour or so, he was able to understand by the names of competitors we used. And he was able to then understand, okay, oh, this is the product which you are creating. So, uh, because these investors are there in the market for quite a long, so they are able to get a better sense of your positioning, your product positioning, your market positioning, by if you give your competitor analysis quite well. So you have to give the names. You can use X and Y axis. A lot of people do that. Or you can use a graph in which you can tell about the offering of each competitor and how your offering is different, by using bubbles, like so uh, and you have to give the competitors logos, their website, so that the investor can get a good sense of what he's entering into. And this last line is very important. You have to state in a line or two how you are different from the competitors, because uh, there are two things which investors are always very worried about. One is that uh, if you are entering into a market in which there is already someone who is put in a lot of money, so you'll be naturally competing with that person, and then you will need the dollars to compete, because initially uh, that particular competitor who's already there in the market, they can always lower their price because they are earning since many years. They have the balance sheet. So and secondly, they already have a product recall in the mind of the customer, so they have an advantage. They have an early mover advantage. So, and secondly, the investor always fears that, okay, you are entering into a market and you are trying to create a technology product there, but uh, any new company, any investor will say that this is something which they are creating quite good. I'll just put in $100 million and create a new company and I will do it better. So that's when they start getting worried about uh, first mover advantage, about uh, intellectual property, about barriers to entry. How will you create barriers to entry for new investors? So that's when they start getting worried about all this. And hence, this competitor slide is very, very critical. Then competitive advantages like uh, your unique selling proposition and the barriers to entry, which I just said. And here, apart from your competitive advantages, side by side, you can give a slide as to in the next 5 years, what will be your revenue, how many products you will sell, what will be your EBITDA, uh, earning before interest, depreciation, taxation, and amortization, which is called the operating profit. So that particular graph you can give, and along with the graph, you can give competitive advantages. Now, if anybody needs sample pitch decks, you can ping me on LinkedIn. I will send it to you after this event today. But I have not put in a lot of samples today because then it will go too long. I'm just trying to give here what are the important things to put in a pitch deck. Then the slide which comes is the ask, the amount you are expecting, and for how long that amount will be used for. I will give you a very good heads up. Uh, Usually, the investors are quite patient uh, with those who have European money, and even those who are pension funds, endowment funds. So those who have this kind of money, those VC funds are quite patient. They are patient for 5 years, 8 years. So when they see that, okay, we like this company, and then they start thinking what is the amount this company is asking and whether it is justified or not, because then you have to think about valuation and valuing your company. We also do valuations, by the way. So at that particular time, usually their ballpark figure which they use, the rule of thumb, is that if you are asking for a cash burn of 18 months runway, 18 months, then they like it, that okay, 18 months is a good time. Because if you are founders of the company and you continuously put your mind in fundraising, then how will you run your business? So instead of 12 months, if you ask for 12 to 18 months, then it is better. And and in 18 months, you can also achieve a lot, and your valuation can go exponential for the next round, and which the investors like a lot. So the investors, when they invest, they have to report their investments uh, in a way which is called mark to market. As in, they have to mark their valuation of value of their investments with comparable companies in the market, the comparable investments in the market. So they always like to have good mark to market valuation gain on their balance sheet. And so if you are asking for 18 months funding, and you are achieving quite a lot in those 6 months, 10 months, 12 months, then their mark to market goes up on their balance sheet. And their LPs, limited partners who have put in money, they like it a lot. So that's the importance of uh, how much money you are expecting. Now, a lot of India side people, they put the amounts which they are asking in lakhs and crores, and which is the Indian units. So I will strongly suggest put USD, put USD $100,000, 200,000, put in millions, and not only in INR, because it becomes confusing because the investor pool is nowadays global. So no point being too India specific. And along with the amount which you are asking, you should give the investment history. Till now, how much have you raised? Uh, Now, a lot of founders don't like uh, to put the dilution, that they raised this much, but how much they diluted. So fine, don't put it in the pitch deck. Uh, Keep it with you, because once the investor will talk to you, he will get interested in you. Then at certain point in time, you can have that discussion with him. That what have you diluted till now? This happened with me. There's a fintech company which has been funded $1.65 million by a Taiwanese investor, and the fintech company is creating two platforms, totally different from each other, but both very relevant technologies. And so they didn't disclose the dilution which they have done to the Taiwanese investor. And it was normal actually. And the investors didn't mind that. It was only that many investors were interested and the deal progressed. At that stage, they started asking all those questions. And at that stage, the founders were also asking a lot of questions from the investor. So the investor was not only wanting to know more, but he was also telling more as to how much he can invest and the valuation and stuff. So if you don't want to put that investment history dilution, equity dilution, then don't put, no problem. And use of funds is very important. I will tell you, in my 7-year-old experience dealing with 600 investors, 2,500 startups, each time the investor will ask you, how will you use his funds? So you have to tell that this much will go in team building, this much will go in marketing, this much will go in product development and technology, and so on and so forth. And I will give you one more heads up. Uh, the heads up is that there is a very famous fund. We were having a call with a pharma retail tech company and the fund guy. And the fund guy became quite friendly because the deal was quite good, and the rapport just stuck, and it was very nice. So in that meeting, so the fund guy said that, listen, uh, the market which you are addressing is growing very fast, and uh, we want to ride this market, and along with so many other companies which are growing at 30%, 40%, we also want to grow 30, 40, 50%. So he said, he told the founder that you are asking for $3 million. So in $3 million, you have said that you will use 50% of $3 million for digital marketing. So he advised the founder that instead of 50%, you use 80%, because it's a fast growing market, and we want to see our money go in marketing, and in a way that it results in more market share, not only going down the drain, but for more market share. So next, future roadmap. Uh, you have already told the investor how much money you are asking for. You have already told him how will you spend this money. Now the investor wants to know, okay, man, you're asking for $1 million, you're asking for this, then what will be achieved with this money? And this is what a roadmap does. It reflects the uh, desire, the goals which you will achieve once the funds are allocated. I tell you about three, four companies which told the investor, after your fundraise, we will raise funds only once more, and then we don't require it. We have sufficient cash flows so that our needs will be met with our own internal cash flows. And the investor liked it a lot. So, so there are companies who have planned their product build up and product development uh, by managing their cash flows very well. So, you know, it it might not be that your company has planned like that, which is fine, which is fine. I mean, but what I'm just trying to tell you that in case you are planning for such scenarios where not a lot of funding will be required in the future, then there is less uncertainty in the mind of the investor. Because if you are operationally heavy company, you burn a lot of cash, then everything is also dependent on your fundraising ability, which means that the investor also has to keep on helping you out by trying to raise funds for you. So some investors, they don't like this, like Grofers, Big Basket, Zomato, Swiggy, Cred, uh, all these companies, they burn a lot of cash because they are hyper local and they are operationally heavy. They have people boots on the ground everywhere, small offices and everything. So a lot of investors don't like that because they just prefer uh, that so much cash burn should not be there. So these are just pointers for you. You might be creating something hyper local and totally revolutionary. I have nothing against it. In fact, I support all such creation of all such products and services. Next, sample roadmap. This is a sample slide. So, the platform and app launch. Here you can put months and year also. Then, so this is a EdTech sample, a teacher model introduction, content production begins. Uh, Step 5, user acquisition, 20,000 in 8 months. Step 3, expansion in Delhi and Mumbai, and then step 5, user acquisition. So this just an example. Last slide is contact details. Here you can put in the name of your investment banker, or you can put in the name of your contact go-to guy, your office address, email address, contact number, website link. My suggestion to you is, in case you are utilizing the services of a professional like an investment bank, iBank, like people like me who play a role in your funding and pitch deck and valuation and stuff. Then there are a couple of benefits. Uh, what happens is when you are negotiating something with somebody, now what happens is there are a lot of things which you can't say directly to the other person because it might be a deal breaker. So like this company, okay, it's an edtech company. They were talking to a big investor. I was in between, and the investor said, okay, give me your valuation, give me how much funds you want to raise. And so he asked for specific details. Now if an investor is asking for specific details, and you want to say that I want to raise $1 million by giving away 18% of the company, and the investor is totally on a different moon. He's thinking uh, the revenue is about to start, so I should get 18, 20%, 24% of this company for $200,000. Because valuations, they are not easy uh, to generally uh, for valuation expectations to meet. It is generally not easy. So uh, what will happen is that once you tell him $1 million for 18%, there is a chance that the investor will run away. But if the investment banker or the professional or consultant or whatever is uh, is talking to the investor that, so they have done some calculations and happy to show you the calculations, so they are thinking in terms of this much, and then it becomes more like a discussion between the consultant and the investor, and it helps you out because it won't crash your deal. And so there are a lot of things which the middle person can say to each other, but directly saying is a problem. So that's why contact details here, you can, if you have a professional agency, you can put their name. Otherwise, you can put your own name. Thank you. Thank you. This is about the whole presentation, and happy to take questions from whichever uh, anyone who wants to ask any questions. Happy to take the questions.
Hi Tushar, my name is Rajesh. Just
Hi.
wanted to check, while one rigorously goes through these, important so-called steps in terms of making a pitch and a deck and things like that. Now, minus a scenario of having hired a consultant, what is the surety or the hit ratio that one goes through in terms of acceptability?
I didn't get you after you said acceptability.
So I'm saying that in terms of acceptability of the project, while you've gone through, followed all the inch by inch in terms of actually, making a pitch. Okay. What has your experience been in terms of success of a funding or a non-success of a funding?
So, see, a pitch deck, uh, see, a pitch deck is actually your business presented in logical and crisp manner and covering all the points which should be covered from an investor's perspective. Now, usually what the market says is that I'm sure you would have seen Kalari's businesses getting sold to Reliance, and a lot of them, Milk Basket and Urban Ladder. And so what I'm trying to tell you is that uh, there are 3 4 ways in which investor looks for exit. And uh, the best way is that follow on funding should happen in the company. What you are trying to ask me is that what is the hit ratio?
Yeah.
Am I right that you are
Yes.
asking the hit
Yes.
ratio? The hit ratio is not very good because there is a trend of investing early with even Kalari and Sequoia, and so the earlier you invest, the the more you are betting on the founder, and not on the numbers on on which we are working, like like revenue, like product market fit, like early traction, like proof of concept, and uh, so it says that 90 to 92% of the startups which go out to raise funding, they even if they raise funding, then many of them don't are not able to raise follow on funding. So uh, the ratio is actually very competitive.
Okay, thanks.
Thank you, Mr. Rajesh.
Yeah, hi
Hello,
Tushar.
sir.
My name is Sanjay.
Hi, Sanjay.
Tushar, see, I am trying to do something in the informal sector when it comes to managing the pre-consumer textile waste.
Pre-consumer
Textile waste,
textile waste. Okay.
textile waste, right?
Okay.
So, since this sector is very unorganized and the potential is like anything, I'm
Hmm.
struggling to find out how do I articulate the size of the market, because end of the day I need to show the unit economy, which is also challenge.
Hmm.
But the
There are
initial I have to figure out the size of the market.
See, there are two ways in which the market size is taken. If you are not able to get handle on some reports, they usually what we do is that we have access to databases like Capitaline, like Reuters, like Bloomberg. So either you get the market share data by top down method or bottom up method. The top down method is that total textile market size in China is this much. Out of that, the textile production which happens is this much. Out of that, the total waste which is generated is this much. And hence, the percentage waste generated in a market like China out of a total market size of this much is this much. So you get some ratios. So this is a top-down method. The bottom-up method is there are 50 companies in China which are dealing into textiles. Out of that, 20 companies are dealing with the textile waste, and the total turnover of these companies is this much. So you will get some ratios that China GDP and their textile waste companies is usually this ratio. And India GDP, you already know. India, you have a lot of data, so you're able uh, uh, to get some calculations doing and then calculate it. In case you are not able to find data in public domain, then you can use this top-down method and bottom-up method, compare it with 3, 4 countries, and then create your own data.
Okay, as an investor, would you be like convinced and comfortable if I tell you like total production of the textile waste, for example, 70 billion square meter of the fabric in 2020, and
Mhm.
in based on some reports, it's like 25% is the
Let's do one thing, Sanjay ji. Let's take it offline because this is just a very specific case. So others,
yeah yeah
uh,
yeah
so you are please feel free to approach me on LinkedIn. I will then exchange numbers and then we can talk about it.
yeah. Thank you so much.
Thank you.
Hi, sir.
Hi.
And this is Dr. Saurabh.
Yeah. Hi, Dr. Saurabh.
Sir, how are you, sir? Sir, we are
I'm good.
working on social media applications. Okay.
Mm-hmm.
We have certain ideas and we have taken help for the professional. Okay, who is working on developing a pitch deck and financial documents as well as market research. So I find a document, but the thing is that I haven't been happy with the document. So can we connect with you?
Yeah. Yeah.
So
Yeah, please connect with me.
how I can
Uh,
connect with sir, and I
uh,
have some whether the social media application can we go for the funding or not, and it is scalable everything. So that is the things,
uh,
and we are a
I
startup with the just new sir, so we need some big good help support from your side, sir.
You can reach out to me. I will just put my LinkedIn profile on the chat.
Yes, sir.
Then you can reach out with me on LinkedIn,
And
and
please
I'll
give me
put my
your
email ID also on.
and you give me your contact number also, and how we can get a fix appointment with you, sir, to can discuss this scenario with
Sure,
you
sure,
personally.
sure. I will just put my email ID and LinkedIn profile. But do I have access to chat? Yeah. I'm just putting it on chat. Yeah.
And please, if possible, we can how can you when we can connect you, sir?
Just connect with me on LinkedIn. I will revert back and share numbers, and then we can talk directly. No
Thank you,
problem.
sir.
My name is Hardik, sir. I have pitched my startup idea to you in the IIT BE Summit this year, and
Yes,
I've
yes,
also pinged you on LinkedIn.
yes.
So you have shared your email ID, and I have sent my pitch deck to you to your email ID. So please check it once.
I will check it. There was my whole family had got COVID, and I just recovered. The whole family just recovered. It took for 1 month. I was out of action, but almost since 10-15 days we are all fine. So I'm sorry if some delay happened. I will definitely check it and come back to you.
Thank you so much, sir.
Hi, sir. Kunal this side.
Hi, Kunal.
Yeah. Just have a small question. We are a startup. We have started. We have done bootstrapping until now,
Mhm.
and it's been around 2.5 years,
Okay.
and currently have a runway of roughly 4 to 5 months. And actually, I've been thinking about raising funds since
Okay.
now. I'm just a new startup and I have no traction basically.
Okay.
So without
What is the
traction,
kind
how
of
do I?
company? What is the kind of
Yeah,
company you are wanting to
yeah.
create?
I'm into edtech sector, and I have AI IoT based embedded systems, and basically a SaaS subscription model. I'm
Okay.
planning on using. So
Okay.
the thing is, you mentioned that, and I've also observed that a lot of people mention that if you show traction, then the investors put in more interest into giving you funds. But since I'm a newcomer and I want to raise funds, so how do I approach it? That was my question actually.
See, there are uh, there is there is proof of concept, then there
Yes.
is product market fit.
Mm-hmm.
Now, see what happens is the moment the moment investor sees product market fit, then it's so confidence for him that he's putting money in a company in which the market fit has been achieved. I will tell you, Indian market is one of the most difficult market in the world. We are very
Okay.
price sensitive, we are very quality
Mm-hmm.
sensitive, we are very service sensitive. And
Okay.
Indian consumer takes a long time to take a decision whether to buy a thing or not.
Mm-hmm.
He has a lot of time. So
Yeah.
what foreign investors they think about India is that if a product achieves product market fit in India, they can
Mm.
plug and play that business plan across
Yeah.
160 countries, and it will do well there also.
Yeah. Yeah. Okay. Okay.
And
So
and
that yeah,
so,
that is
my
what I wanted to.
see, I'm
Yeah.
not saying you can raise funds pre-revenue also, but you will find a lot of
Mm.
challenges. If you are able to bootstrap and take some money from friends and family, achieve a product
Yeah.
market fit, then you will get good valuation also. And see, if you have some revenue like 1 crore,
Mm-hmm.
then you have a basis to tell the investor, boss, I am asking a valuation, these basis these numbers.
Yeah.
So it becomes things change quite a lot once you have revenue. So
Yeah.
my
That is
advice,
that is yeah. That is why I was trying to ask you, without traction and without any revenue to show, how do I approach any angel investor? That was basically what I wanted to ask. What would you advise on it?
my advice is no problem. You can approach, but then be prepared for the fact that it will take good amount of time for you to get your money at the terms and conditions which you want.
Okay. Okay. Okay.
Because
Okay, sir.
see,
Thank you. Yeah.
equity investing is not only about getting money, it's about
Yeah.
getting the right deal, the right term sheet, you know,
Mm-hmm.
investor
Yeah. Yeah.
issue. So wo hai. So let us talk it out. Uh, I will advise you on how to go about it.
Yes, sir. We can talk later. I'll connect with you on LinkedIn, and then we can move forward with it.
Sure.
Sure. Thank you so much, sir. Yeah.
Thank you.
Sir, hello.
Yeah, hello.
Yeah, sir. My question is this: as a startup founder, how much equity were to give to investors? Like,
See, what happens is if you are offering 6%, 8%, or 10%, the investor always feels that it is too less.
okay,
And they also have to convince their limited partners. They go to an investment committee. The investment committee has limited partners, and they present their case that we are investing in this company and at these terms and conditions.
okay,
Now, they know that if they are saying that they are taking 6, 7%, 8%, 10%, then the uh, deal will be turned down. So, so my advice to you is you should offer between 16 to 24%. You can take more money. If you are supposed to wanting uh, $300,000 for 10%,
right.
then instead you can ask for $600,000 for 20%.
But before asking, we need to calculate the value of our startup, early stage
You
startup.
have to get the valuation done. So the valuation is done basis three, 4 ways. One is market multiple, one is transaction multiple, one is net asset value, and one is discounted cash flow. So once the investor says, okay, fine, I like your company, I want to put money, then he will ask you for what is the equity you are offering and what is the amount you want to raise. At that time, you should get a professional valuation done because that professional valuation will support your case.
Okay, sir. Thank you.
Thank you. Thank you.
So there is one question. After a pitch, would you send your slide deck to potential investor upon request?
I will always send. Uh, so, the investor has a full right to, uh, the investor comes on a call, he understands the business, and then he has to prepare a note. See, mostly in the VC fund, they have very small teams. So they have 2, 3 analysts, and they have the partners, limited partners, and they have a principal who's the head of the team. They have in between. Now, what they do is every week they have a standing kind of meeting, which is a very short meeting for 1 hour, 2 hours. And whatever cases, good cases, the team has seen since the last 1 week, they discuss it out verbally. And there on the standing meeting, it's called IC meeting, they discuss it out. Now, if the uh, team guy who's discussing your case with the LPs wants to have better confidence about what he's talking about and wants to see your pitch deck, what is the harm? I don't see any harm in sharing your pitch deck with the investor. It will only benefit your case.
So there is one more question. Should one have a specific ask in pitch about money?
Um, yes, you should be very clear as to what is the amount you want to raise. Um in case you have a, larger amount which you want to raise, and you feel that if I put, suppose you want to raise $2 million, and you feel that if I put $2 million in the pitch deck, then uh, this particular investor might run away because every investor doesn't have that capacity to put $2 million. So some have the capacity to put $300,000, some have capacity to put $500,000. Then you can always say that my round size is $2 million, and looking and happy to raise less amount also. The balance I can raise after some time. So we can do that while talking to the investor. We can not on the pitch deck, but while talking to the investor.
So there is one question. If I want to convince donors or CSR organization for investing in sustainable trade project, so when I should pitch?
Uh, there are two ways in which you can raise funding for sustainable, social, corporate governance, environmental companies. One is the CSR funds, which is like 2% of the profits of every company. The company has to give in CSR, corporate social responsibility. So, if you know the CEO, CFO of good companies who have big balance sheets, then you can get access to your CSR fund and you can use this money for social projects. The second way is that there are ESG factors which environmental, social, and corporate governance. Now, these factors are playing a big role in attracting money, and a lot of funds who cater to, excuse me, these factors, they are called impact funds, and these impact funds are now having lot of money. I will tell you, I was running a solar mandate and also a electric vehicle mandate, and there are more than 45 impact funds in India, like Avishkar, Lok Capital, Shell Foundation, SBI Neve, uh, Elivar Equity. So these all funds, they invest in environmental, social, and corporate governance factors. So if you want us to raise funds for you for these factors, we can do that also.
So someone is being requesting to send us the sample pitch decks, sample pitch decks, as you have mentioned in the session.
So you have to send me a mail and I will reply with sample pitch decks. I hope that is fine. And also the kind of company you have. And you can mark Shivani also. Shivani, you can also.
Sure, sir.
Mhm.
Sir, what format should my deck be, and should I spend timing making it look good?
If you are, see, why we discussed about why pitch deck is important. It is your first impression on the investor. If your first impression on the investor is not good, you know, there is uh, a big venture builder company in the US, and they advised me once about uh, uh, about uh, your impression, your public impression. Now, suppose you are approaching the investor asking for money. Now, the investor will do some due diligence. What is the kind of due diligence he will do? He will search your name on Google. He will search your company name on Google. And then once he searches your name, he gets your company website. Then the quality of the website is important. Then when he searches your name, he gets blogs which you have written. Then he says, oh, this guy has been very interested in these all things. So the first 10 to 20 searches on Google about your name and about your company name is important, is very important. So write some blogs, create some videos. Your website should be top of the top. Just like that, your pitch deck also should be top of the top. So if he sees the pitch deck, he finds no reason why not to invest. And then it will help you a lot because you will be on the front foot with the investor. And if you are on the front foot with the investor, there are more chances of your deal going through. I hope I have answered your question.
Yes, sir, sorted.
Okay, thank you.
So I guess there is no other question from the participant side.
Okay, so
Uh, there is no other question, sir.
okay, then I will just thank you so much, Shivani. Thanks to you as well having this event today. And I am always available, even if you want to somebody wants to discuss their problems on corporate side about business issues. I'm always available. I have just shared my LinkedIn and my email ID, and please feel free to reach out, and
आपको 2 मिनट में
happy to
खत्म कर रही हूँ सर 2 मिनट है
happy. Thank you so much, Shivani, and thank you everyone for sparing your time and coming today. I hope I was able to answer your questions well.
Yes.
Thank you, Kunal. Thank you, Jovi. Thanks, DJ. Thank you, everyone. Nitesh,
Thank you so much.
thanks. Thank you. I'll just log off then, Shivani.
Sure, sir.
Sure, thanks.
Dear participants, you can subscribe our YouTube channel for the recorded session